Good morning, everyone. Thanks for being here for day 2 of Links 2023. Adrienne, it's great to have you back. It's been quite a year since we sat in less comfortable chairs down in the financial district. But what has happened in DFS over the last year? Maybe help people understand some of the highs, some of the lows. What's been happening?
Yeah, absolutely. Well, first, thanks for having me back. It's good to be here with you, and good morning, everyone. A lot has happened, most of which I could not have predicted in the last year, but some of which we did predict and say we were going to do and make happen. I think the most notable of that is the staffing at DFS. When I came in now 18 months ago, it was shocking to me just how understaffed the place was, especially in the virtual asset group, where we really had a handful of professionals. And now that's a team, and some of them are here today. It's a tremendous team of over 50 people from industry, from other regulators, from technology, from the venture world. So really a wonderful and diverse team that we have. We also, at the time, didn't have assessment authority. So we're funded by industry assessments. It's true for banks and insurance companies. And although we had regulations on the books to regulate crypto since 2015, we didn't have the assessment authority, which helped hinder the resourcing issue. So we are very close to finalizing our regulations on assessments so that we can assess the industry and have them be much more like banking, insurance, the other industries that we regulate. And I think that's going to go a long way to help continue resourcing the department. We've also put a lot of guidance out in place, and we've really come up with a robust examination procedure. We've brought some enforcement actions, which I know we'll talk about. So what you really see now at the department, unlike what we had a year ago or a year and change ago, is soup to nuts suite of tools for regulating this space. And really, we're continue to be the only prudential regulator with virtual asset specific authority in the country. And we're just continuing to build.
And those, that sounds really positive for people. There's a lot of people in this room who are licensees of NYDFS and also sort of broader industry participants. Extra staffing is going to help with, you're still granting licenses. Yep. You're still overseeing and building more controls around sort of the sector. Is that something that we should expect to see moving forward?
Absolutely. So, when we talked a year ago, it was no secret that the licensing process was slow, but I said then, as I'll say now, speed is not the right metric. And I think that's evidenced by the fact of who we didn't license, right? FTX and many other now infamous names. So we want to get it right, but it doesn't mean it can't also be efficient. So I think we've done a lot with the backlog, granting new licenses, even since FTX, even as recently as a few weeks ago. But making sure the process is just smoother, adding transparency, letting the industry know, hey, your application has to be complete before we will start reviewing it. Hey, you get 3 deficiency letters before we're going to ask you to withdraw. Looking at things that had just been stuck in the pipeline, and even the company hadn't been moving it forward. So how do we clear that out? And again, with the guidance and the exam protocol. So it's just a much more robust framework now than it was a year ago. And that's really a credit to the amazing team we have.
No, I think that's very exciting. I mean, what about some of the lows? I mean, we've seen, it's not all been fun and fairies since last year. We've had significant risks of financial contagion.
Yeah.
We've had the collapse of FTX. How has that impacted sort of your stance and the work that your team's doing?
Yeah, I mean, to tell the truth, it really hasn't impacted us all that much, in that we had clear rules on the books. They prohibited things like lending of customer assets. They require things like full reserving for stablecoin issuers, right? So when you think about the ills that have traversed the market and the crypto space in particular, the rules that we have were, I think, pretty prophetic in making sure that most of that fate did not befall our licensees. So it really hasn't changed what we do much. You brought up the licenses we've granted even this year. And after FTX, people were saying, oh, of course, DFS is going to stop issuing licenses now, right? It's just not true because the rules that we have, right, have proven to be pretty good.
Yeah.
Yeah.
And when something like, Silvergate, Signature, FTX happens, maybe just like explain like what happens in your office and like how do you respond to something like that?
Yeah, I mean, again, it's a credit to the team that's been there, that we've been building, that they're so prepared and knowledgeable and hardworking that we can respond to a crisis like we saw with the banks several weeks ago. The issues with Signature, frankly, are just ones of liquidity. Unlike Silvergate, unlike SVB, Signature actually had a very diverse depositor base, right? Despite its rap as a crypto bank, the facts just don't bear that out. And the idea that the taking possession of Signature was about crypto or this is choke point 2.0 is really ludicrous. I mean, I just have no other way to say it. What we saw was a new-fashioned bank run when you have a high percentage of uninsured deposits and you don't have liquidity management protocols in place to meet that. You end up in a place where you cannot open on a Monday in a safe and sound manner, and then the regulators working together have no choice but to make sure depositors are protected and that there wasn't going to be more contagion in the system. So the idea that Signature was about crypto is just silly. And moreover, what I would say is, if you look at our rules, if you look at our guidance, they necessitate our virtual asset companies having a strong banking partnership with well-regulated banks. So the idea that we don't want those banks to exist just doesn't make any logical sense.
And I think that that's such an important point because a lot of talk on the industry and actually sort of some of the talk from yesterday is how do we make sure that there are options available for cryptocurrency-related businesses and stablecoin issuers to actually have safe and sound institutions to put their money in, by having clear rules on the books and the expectation that actually cryptocurrency firms are able to bank with these with reputable financial institutions is the key to sort of the industry growth. And I think that's really important that people understand that those rules are out there and that those guidances are clear. And maybe the question becomes like, well, when that's not the case, you brought some sort of high-profile enforcement actions, and that's the other way of signaling to the market that these things do exist and need to be adhered to. And how should people be evolving their approach to financial services in the light of some of your enforcement actions?
Yeah. First, I am not a believer in regulation by enforcement. I actually don't think it benefits consumers and markets. It certainly doesn't benefit industry, so it's not what you see from DFS. We've got rules on the book, we've got supervisory agreements, we've got examination procedures, and we go through the whole thing just like we do with banks and insurance companies, MRAs, MRIAs, right now, terms that everybody knows well. But when we can't resolve issues through the supervisory process, or when issues are so egregious, or when we see recidivist activity, we also have enforcement as a tool in our tool belt. You'd like not to be able to, or not to have to use it, but sometimes you don't have a choice because of the nature of the activity or that it's repeat offenses. And in that case, we won't hesitate to use the authorities that we have to not only bring the enforcement action and have people pay penalties, but to force remediation, because penalties are fine and they're a decent deterrent. But really what's more important to me as a regulator is that we're putting remedial requirements in place so that the companies then have to do better going forward. And then of course where we can or where it's required, get restitution for consumers. So last year, and this is not specific to crypto, but in 2022, DFS got over $157 million back to New Yorkers in the form of restitution, not penalties, right, not other dollars. And that's really important, as Commissioner Goldsmith-Romero was talking about, right, in building trust.
And I think that that's such a good metric to be tracking in terms of how financial regulation and really understanding the business models of these legitimate businesses should be serving the interests of consumers. In terms of like broader than just consumers, we've seen like the wake of FTX has caused sort of a large shuffle around, and maybe you could call it a scramble around, how do we prevent the next FTX? And there's been a lot of chatter in Washington about it, and I'm just curious, like, how does your conversation with, you've got rules on the books, you've kept New York in a good place, like, how does that translate to your conversations with other regulators in DC?
Yeah, it provides us with a proof point to when we are in DC, when I'm talking to legislators, when I'm talking with other regulators, and as my professional history is in federal government, right, at the Treasury Department and at the National Economic Council in the Obama White House. So I think between my resume and the work that the team has done, when we are talking to lawmakers and regulators in Washington, we come with quite a lot of credibility. And I think we've been involved in many of the bills that have been working through Congress. We talk to the regulators all the time about the things that they're doing, could be doing, should be doing. But we think we have a good framework, and my hope is that we will see something come out of Washington soon, that there will be other regulators on the beat, that we will see a federal framework, and that it'll look a lot like New York's.
Yeah, it's not often that, maybe no, it's not that often, but it does sort of strike me that there is potential in such a fast-moving environment to have a more sort of nimble approach. That's something that is where you have clear jurisdiction in the city, and you are able to then move on those things a lot faster, and then create blueprints for wider issues. How much is that? You were recently appointed to the FSOC, which, couldn't have happened at a better time, and must have been very interesting conversations. How does crypto fit into sort of the FSOC work? And are there conversations about virtual currencies that do exist?
Yeah. Well, first, and I'll make a note too, because you mentioned it. I think it's an important fact that our authorities in New York don't depend on the definitions that are prompting all these sort of turf battles in DC, right? Whether it's a commodity, a security, a currency, for our purposes, doesn't matter, which is very useful in our ability to regulate. With respect to FSOC, it was just an incredible honor to be elected by all the other states to be the state representative on FSOC. Especially because when I was at Treasury, I was a staffer in the room, and now I get to sit at the table and talk about all the important issues of the day, including digital assets. So I think the world knows FSOC, Treasury, right? They've done quite a lot of work around digital assets. There's more work to come, but I think to be able to inform the thinking of FSOC from the state perspective, and not just any state, but the state that really leads in regulating the space, I hope will help us move forward in DC with a robust framework, so that we have some more federal partners, and they have the authorities that they need on the books to help us regulate the space.
And that's super interesting. And I think that the industry sort of looks at those meetings, and obviously there's bigger macro conditions that do affect the industry and sort of how people are thinking about investments, but also looking at where does that federal framework come from, and are there ways that those regulators can work together to bring more clarity into the space. The other area that I think the industry looks a lot at and is actually sort of more part of the conversation today than I think it was a year ago is that international regulatory frameworks are things that people are looking at very closely. There's people who are looking at what is happening in France, and what is happening in Dubai, what is happening in Hong Kong and Singapore, and a lot of the international markets today. How does it work in sort of relating from the state regulator to a lot of these international counterparts?
Yeah, we have a great advantage in that we're New York. right? So we sort of punch above our weight, certainly as a state regulator. And we're always engaged in international conversations with regulators. On the banking side, we regulate 80 foreign institutions, and we're the group-wide supervisor for a number of global insurers. So we already have that connectivity to international regulators, international markets. I'm abroad quite frequently, Singapore, UAE, Europe, meeting with our regulators that we watch our institutions with. And I never take a trip where crypto is not part of the discussion. I think a couple of things that come up. One, which is incredibly gratifying, is that when I talk to regulators overseas, they say, we know if a company has met New York's standards, it will meet our standards. We know that the DFS team scrubbed this thing, that you guys are on top of it, and that makes our job easier, which again is a great credit to the team that we've built at DFS. We're doing more and more work. I'm going back to the UAE in a couple months. I'll be back in Western Europe this spring. We are doing more and more work around passporting and joint oversight, right? So that companies have a little bit more streamlined approach. And then so that as regulators, if you have one affiliate in the UK, one affiliate in the US, the regulators can work together to oversee the entirety of the risk, right? And not just look at their own little piece of the pie. But again, also find ways to hopefully streamline our oversight so that it's less burdensome on the companies. And I think that's a win-win for both industry, for regulators, for consumers, and others.
And how much in those conversations do you feel like you're educating those places versus also taking ideas in reverse? Are ideas coming back into the US?
Oh, always. I mean, we've been at this for a long time, right? DFS has been regulating the space since 2015, and certainly we've seen more activity with the guidance, with the assessment, with the robust examinations in the last 18 months. But there's a lot of experience, a lot of institutional knowledge at DFS. So often we are going and people are saying, tell us what you've learned, what works, what doesn't work so well, what you would change, what's next. But we're always getting inputs on best practices. And I think watching some of the regulators overseas grow up now with the virtual asset space, what it is today, versus when the BIT license and the limited purpose trusts were put in place many years ago. There are new things that we're taking from them as they're building from scratch now. So that dialogue is incredibly helpful for everyone.
And so I think that we have, again, like we're probably active in over 60 countries around the world today, and so see a lot of that maturity as well, and seeing places actually build frameworks, and sort of excited to see what's happening in Europe with MICA and what could be newer frameworks. We see a lot of also adoption of technology to think through how to more effectively both oversee the market, but obviously comply with a lot of the new requirements that are being placed on companies. Could you talk a little bit about DFS's approach to sort of leveraging technology like blockchain analysis, and what you expect also from licensees in their use of technology to comply?
Yeah, it's an interesting thing, and maybe this goes back to the first question about what I've seen and learned over the past year. I mean, one of the things that was so surprising to me was an industry that's just, it's a tech industry, right? It's built on tech. It's meant to be sort of the opposite of the analog things that we've seen in traditional financial services. And yet, for many companies' compliance programs, we go in as part of our exams for enforcement actions, and we see reams of paper, right? And we see Excel spreadsheets and other things. So I'm going to use this opportunity to make a bit of a point about the maturity or lack thereof of many of the compliance systems we see. And that's just not only for the small companies, but for the large companies as well. So first, I would say there's still that lack of maturity around BSA, AML, around cybersecurity, many of the things that the commissioner noted, and we are eager for the day when those systems mature and scale the same way the business side does. But part of that is using technology to help with that compliance, and not just having it, but using it well and having qualified professionals and the human capital resources that know how to use it. I mean, I could tell you so many stories, which I will refrain from, but right, where companies come in and they say, well, we've got this technology. Well, and then we ask how many licenses they have. Well, 2. Well, wait a minute. You're doing, an incredible volume of transactions. Well, it's great that you have the technology, but do you have the professionals that are trained in using it and can use it effectively? Well, not yet. Right? So we are eager for people to be using all the analytical tools that we now deploy at DFS, but it's not enough just to have them. They really need to be paired with compliance professionals. And listen, it's a war for talent. I mean, we feel it in the agency, certainly, so I know the industry does too. But it really is an imperative that the compliance apparatus scales along with the business apparatus, that you use the tech that's available to you, but that you also have the trained professionals who can leverage it properly.
Yeah, and I think that we're seeing that across the board in terms of seeing how financial services firms also have educated their staff to be able to build capacity in this domain, as well as helping regulators understand it. When you think about your own leveraging of technology, you have a lot of sort of reporting requirements, and you have these things. Like, how is that used and leveraged in sort of the oversight of this market?
Yeah, I mean, we have the ability to not only use the technology to read and analyze the reports that we have, but also to do real-time supervision. And frankly, it's a model I hope we're going to be able to duplicate in other parts of the house, right? This idea that regulators should just come in once a year, sort of go through the books, interview the staff, I think was fitting for maybe a 20th century financial system, but certainly not for a 21st century financial system. So for us, it's using the tools to analyze the reports that we get, the information that we require companies to give to us, but also so that real time we can be monitoring the space, finding problems before they metastasize, before a consumer gets hurt, before there's market manipulation, right? That's the ideal for us. And I would say similarly, because you mentioned sort of traditional financial services, I mean, when we think about what we're seeing in the banking sector, and especially as it relates to crypto, right? What we're seeing with banks is they want their customers, especially to the extent they have crypto customers, to have that maturity, right? The rules for banks have not changed around customer due diligence, around AML, KYC, right? These are all things that they understand well, are very seasoned in looking at and monitoring. And so for them, it's important, right, that their customers have that same level of maturity and socialization. And I think that'll make it easier for the virtual asset community to be engaged with the traditional financial services system in a way that will grow the space responsibly, but in a way that I think we're all hoping will happen.
And just to close on that, I mean, obviously New York is, Chainalysis headquarters. We've been here for a little over 8 years, and I think that one of the things that we see is that there's still a lot of companies getting built in the state of New York, and we see everything from technical builders to of infrastructure to larger businesses. Is there like a closing thought about how, like, do we think that New York is going to be the crypto capital, and how we compete with Paris and Dubai?
Yeah, well, I mean, New York is the financial capital, so there's no reason it can't be the capital for all types of financial innovation, including virtual assets and cryptocurrency, when it's done well and done responsibly and well regulated. And this goes back to this refrain that everybody's tired of hearing me say, which is when you have rules on the books, when they are transparent, when it's in black and white and everybody knows, right, what they are, that is the best way, and frankly the fastest way, to grow a robust and responsible ecosystem that can innovate, that can integrate with the traditional financial services system, that can serve customers and make our markets more efficient. I think that's all going to happen right here in New York, and stay here and continue here.
Well, thanks so much, and I hope that next year we don't have as much of a tumultuous sort of event with as many sort of failures of institutions. But actually, we really appreciate you spending time with us, and yeah, look forward to having you back.
Yeah, thanks for having me. Thanks, everyone.